Hey everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 28th of August. I'm Doc Severson. I'm joined with Dave Lukas over here of 12-Minute Trading as well too. And here we go. We have the dog days of summer. So after a pretty wild month so far in the month of August, where we've seen basically nothing but red tape to the downside, wondering if this market is going to hammer out a bottom and head higher into the month of September, or do we have downside targets left to go? Dave, what are you thinking out there?
I think this week is kind of a total just throwaway week because this is actually typically like the lowest volume week of the year. I mean, it's pretty much all machines trading and maybe some interns at the trade desks and stuff while things are out. So I think this week you're going to see some you've got some news that comes in. The machines, the algos are going to trade off that up and down. This is going to be a whipsaw week, I would expect, for this week. And then we get into September, and that's when the real fun begins. September is traditionally the worst month every single year in the stock market. Right. So August was a rough month, although we really enjoyed it because we love these sideways markets when we're selling the options, the iron condors against them. But I think if we're to get a bottom, like to cement a little bit lower of a bottom, it's going to happen in September. And then it'll probably be early in September. And then we're going to probably have some rally into that Fed meeting later in September and then break again off of that. I just think I've been telling my students, I think we're just in for kind of a bigger sideways market for the next few weeks until things kind of shake out. And then we'll start to trend as we get into October after that next Fed meeting. I think right now Fed futures funds futures are pause in September and then hike again. I think 60% chance in November. So we'll see how that pans out. But I also think we got to be on guard for a larger credit event. Overnight, China, there's a bunch of stuff going on. Evergrande is pretty much going down in flames. I think they halted it after it was down 80%. China is telling their state banks that they must start buying stocks. They cut the tax on the stock market in half to stimulate some stuff. And it started with a 5% bounce, and I think it ended the day up about 1%. So I don't think that bloodbath's over yet. And I don't know if that is going to permeate. Contagion is the word that everybody uses, right? I don't know if that's going to permeate into anything else yet, but I'd be watching that. And I'd also watch Japan. Japan has a lot of, they're the largest holder of U.S. debt, and their bond market's having some issues too. And if they have to start selling U.S. debt to help shore up their bond market, that's going to cause some problems in the U.S. market stuff too. So there's I think, a lot of unknowns, and I think that's what's going to keep the market on edge for a little while, at least as we get through things here in September.
Dave,
so fourth quarter is usually an up quarter.
So. Doesn't the name Evergrande seem familiar to you? Wasn't there an issue a few years ago where they were melting down?
Back again. They got bailed out that time, but now it's worse. So now they're even worse shape. So they actually filed for bankruptcy in the United States, not Chapter 11, a different type of one, because they had an entity here a week or so ago. So they actually filed for bankruptcy here. And so China's got a lot of issues. China's economy is not doing well. Their youth, the 20-year-old and stuff that are of working age are having trouble with, the job market's a real problem over there. In fact, there's a lot of suicides happening, sadly, over there right now in that age group and stuff. So again, you don't see a lot of this stuff obviously in our own news and stuff. You have to kind of go around and look for it and kind of find it on things like Financial Juice and other stuff that exists out there like that. But if you kind of start going down the rabbit hole, there's a lot of things happening over there that just aren't great. They're having a lot of problems. And so does it spill over? Don't know yet. We'll see, but China being the second largest economy, when it has an issue, it typically does cause some ripple effects. So,
I heard, I was listening on the news this morning about the same kind of thing about China, and it looks like their one-child policy is actually starting to bite them now, because they're
it's been biting them for years. Yeah.
Interesting.
Yeah, because they have a shortage of women. And my daughter, a lot of you guys know, is adopted from China. And, for a long time, it just from a cultural standpoint, a boy carries on the family name. So a lot of times the girls were, not if all you could have was one child, a girl made it tougher because culturally you wanted to carry on the family name, and so you need a boy, and that's why there were so many girls that were put up for adoption, or that sort of thing over there. And so that hurt them, though, because they have a lot of boys and then they had a lot less girls, and so that's hurt their birth rates and other things and stuff now too. And so it's kind of catching up. These things happen over decades, but they are having some of those issues.
Cool. Hey, for those of you that are joining us live, let us know if there's any questions. We'll be here for another few minutes. So if there's any topics that you want us to riff on while we're here with you live, please let us know. For those of you that are watching this on a replay, which is probably going to be the most of you, or the majority of you, you're certainly welcome to email us at support@12minutetrading.com and propose a question for, well, we're not going to be doing one next week, but maybe Tuesday.
Holiday week.
Yeah, we'll get a holiday week.
Tuesday we'll be back. It's holiday on Monday. Nice day of time burn for positions, which is really nice.
Yeah.
But I think again, this week's just going to be a total crapshoot. It's going to be a whipsaw. You're going to have ups and downs. I don't know if we go anywhere really by the end of this week. Jobs, I think, are going to be the most important thing on Friday here, because of Powell again at Jackson Hole, basically making it all come down to we want to see jobs get crushed. We want to see the job market, have problems and have issues, right? They want to see that happen. So I think jobs are going to be something that is probably the bigger market mover for the week. But we got JOLTS tomorrow and a few other things out there. PCE actually comes out on Wednesday.
No, it's
Fed's preferred date of inflation. So.
Thursday.
Yeah, or Thursday. Yeah. So we'll see.
Hey, I wanted to bring up just a quick chart here of the S&P while we're talking here. And this weekend I put out a video. I don't know if you guys saw it, but it was about Darvas boxes. So what we do have is we have about 100-point range that the S&P has set up the highs and the relative lows. And they're about 4350 and 4450. So Darvas, Nicholas Darvas was this famous investor from, God, I want to say the early 50s, I think it was, Dave. And he was famous he was traveling the world. He was like a professional dancer that would go on the road. And he would check in on his investments through what they used cables back then. So these are telegrams and stuff like that. So he would set up a price box like this, and he would make his investment decisions based on the Darvas box. So what we're looking for is, if we do have a price break above 44.50, especially if it closes above that, what this would mean is that we have this series of lower highs and lower lows all of a sudden interrupted. Not only that, but also this trend line would be broken as well too, with a higher low and a higher high combination. So we have a change of polarity back up to the upside for that. So that could be really, really interesting if that does occur. Or we could have the opposite situation, which would be a break below the 43.50, and that would basically just be trend continuation. So probably first stop down there would be about 4,300, and it may happen very, very quickly. And it could be on some kind of data point, like Dave said, relating to the jobs report. Dave, I'll bring up the NDX, and maybe you could walk us through what you're seeing on the NDX.
Yeah, I think right now we're kind of going to be in this range between 4,300 and 4,350 till something breaks. I just don't think we're there yet. This week, again, I would just throw it out. But the NDX is very similar in that you've kind of got this range of like, really at this point, 14,400 has been holding, and then about 15,200 to 300 has been kind of that range that we've been in. So if you're going to put a box around it, if you will. And interesting enough, there's a number of people calling out saying the highs for the year have been hit now. Big players, JP Morgan, a lot of these guys are calling that out, saying NVIDIA was kind of the signaling event. The sell-off in NVIDIA is that, the fact that NVIDIA crushed earnings and still sold off really was a sell the news event, and that kind of says we've hit the highs for the year. That could be. I mean, we may just go nowhere, and sideways for the rest of the year. It'd be awesome, actually, for the way I trade if we did. But I don't know. I still think that the NASDAQ is going to have some juice into the end of the year. I do, and we've said this, I think, almost every week that I've been on. I think the underlying macros are getting worse and worse and worse. I do think we're going to see some pain in the U.S. economy in the future. In 2024, not really, probably maybe see some things this year, but 2024, I think if we're going to get the recession, it's then. I think these guys may run this thing up into the end of the year and then pull the rug going into next year. I just think they're not done yet, right? I think a lot of people lost big last year, and these big firms and funds, they want to make that money back, and then they'll pull the rug out and stuff. So unless there's a bigger event like a credit event that comes from outside, like we kind of mentioned in the beginning, that's when I think they don't really have any control over that at that point, right? And they're just everybody's getting out. But for now, I think we maybe probe lower. Maybe we see 42.50 if we're going to go down there. That cements the next kind of higher low, and then we run up from there and through the fourth quarter. And we're still in a bull market the way this is shaping up. In fact, if you pull the charts up one more time, I think this is really important on both the SPX and the NDX, because I think this is a key level to watch. If you put go to the weekly chart, and you just put the Bollinger Band with the simple moving average on there, and if you just can throw that on real quick, so you've got that, you can see go ahead, straight up Bollinger Band, there you go, perfect, with a simple moving average, and then go to weekly chart.
Yep.
All right. You see, look at how when we pull back, we come right down to that moving average. In fact, Doc, zoom out one time because we'll come back to this, but just zoom out back to the full chart and go back and look at 2021 real quick. Every time we came down to that moving average, that was the support. See that? And so now we're on the flip side, right? What did we do when we went into the bear? It became the resistance, right? And so for the last year, it pretty much was resistance. We got above it a couple times, but you can see we pulled back underneath it. We couldn't hold it. And then in May of this year, we went above it, right? And we broke out May and June, and we've held that, and that continues to hold. And right now, this is a perfect correction like you see in the past, for a bull market, pulling back to that moving average. So for me, the key is if that moving average holds and we turn from here and head higher, that's all it was just a correction in a bull market. And that's what we're seeing as of right now. It has not changed. If we go below there and can't hold it, so let's say we dip below there and then try to go back above it, and then it becomes resistance again, that's when you can say, okay, we're changing polarity. Things are different.
Right. The price of that level that you're talking about is 43.45 this week, and that will continue to rise into next week as well, too.
Yeah. And if you look at the NASDAQ, the NDX, where have we been coming down to? 14,400 range. Guess what? That's where the moving average is on the weekly chart, right there at 14,400. So it's, that's very glaring to me in the charts right now. And, it just seems like this is the level that if it continues to hold, you're still running in that bull. And I think if you watch this is on just a larger time frame. It's all you need to know when you're going, if you're going to change out of, the current bull to a more corrective or bear, or just stay in the bull. And so you can look at, like, this one is really pronounced. Look at 2021. Every pullback came down to that line and bounced from it. Every single one. So NASDAQ's been really good at holding that line when it's in a bull.
What I'm always fascinated by is always the probes that go underneath there, and then they end up closing by the end of the week. They go back above that level by the end of the week. And remember, these are weekly candles, right? So it's you'll probe under like for the first few days and then close above there and hold that line. So then once you close above there, so that's a 20-week moving average. 20-week moving average. Interesting.
Well, but you had the one fake out, you can see right back there in last year where we thought we had it, right? We had those 4 green candles go right up there above the line, right there. And it was like, okay, I think maybe we're changing back now, but we couldn't hold it when we came back to retest it. That's the key.
Well,
right?
you know
if
what?
You can't hold it.
You know what
then it's over.
you know what precipitated this move down, don't you?
Was that Powell?
Yep.
Jackson Hole?
That was Jackson Hole
Right into
exactly
the
1 year
yeah.
ago. And
Yeah.
that led to the worst selling of the year. And actually it led to the very bottom. So
Yep.
we gotta, we'll see what happens this Friday with jobs. We'll see what happens with PCE. Lately, the inflation reports have been good. Lately, the jobs reports have been okay, right? So we haven't seen stress to the jobs market yet, but we'll start to see that with JOLTS. We'll start to see that with the, the jobless claims on Thursday. We'll see that with ADP on Wednesday. ADP private payrolls numbers have been huge lately.
They've been,
crazy.
it's a total dichotomy. Like whatever the ADP number is, the jobs number is the opposite. Like if ADP is low, jobs numbers like way, outside of expectations. If ADP is super high, then all of a sudden jobs numbers are low. I don't know. I think part of the problem is the way we calculate our jobs numbers is kind of BS. A lot of it is counting, people getting second jobs and stuff too and everything. So and we're getting into an election year. So, I mean, any administration is going to try to make everything look as good as they can, right? So whatever you can do with those numbers to make it look good, you will. It's like how they calculate inflation. Inflation's only up 3 whatever percent. Oh, yeah, it was up 14%. Now it's up 3% on top of that. That's a win. It's like, come on.
Right. People forget that it's a cumulative thing.
Yeah. So it's, so you're up 17% in 2 years or whatever. It's like, that's why people are like, why are prices still high at the grocery store? Well, because, 3% on top of 10, on top of 12, on top of all this stuff is, it's still really bad. Right. So, yeah. And even if you look back how they changed it from the 80s even to manipulate the CPI versus how they did it. If we count it like we did in the 80s, we'd be at like over 10% inflation. So
yeah, no doubt.
It's,
no doubt.
Anyways.
Well, one last call for questions. Anybody that's live with us here today, we'll stick around for another couple of minutes and answer questions. Anything else?
And I think a key thing is just watch that weekly moving average, man. Just watch that weekly moving average and watch what the price does in relationship to it. I think that right now is one of the easiest things to just keep on track and keep following. And that's going to tell you when things change.
Yeah, and particularly the closing print of that week. So we're not going to know that until Friday, and that's after a full day of trading after digesting the jobs report. So we have a week of low volume, high volatility fun in store for us here, I think.
Sure, and I think we have the most short gamma. I think I sent out earlier to our mastermind group. We've got the most short gamma going into this week too, which lends itself to a potential short squeeze at some point during the week.
Yeah, basically short gamma, for those of you who have never heard about it, anytime you sell an option position, you're short gamma, and basically that's code word for saying price, please don't move. Please stay right here. Don't move at all. And, you find out when you're short gamma that all of a sudden the price starts to move. And so that's why, short gamma has got its own set of fun to deal with when you do that. So that's the insurance company model. You don't want things to move.
If it goes the opposite way from where you're positioned, it's great. But if it goes towards you, it really gets can get rough. I think most of the short gamma is to the downside for this week, believe it or not. So on the downside. So
that would be interesting. So you think there's an excess of short calls that are out there?
Mm-hmm.
Well, interesting. Okay, well, nothing heard, so we're going to sign off for today. And like Dave said, we'll probably be back next Tuesday, same bat channel, same bat time. We will, once again, make sure you subscribe to the YouTube channel and you get automatically informed when we do something like this. You get alerted. So it's always good to be alerted.
Have a great rest of your week. Enjoy your long Labor Day weekend. come back after that. That's when things will get serious, and we'll really get into it and run the back half of the year. I think we were talking earlier. We both had a pretty solid year so far as we've gone through our trading at this point and stuff. And so it's just all about keeping it consistent and disciplined through the back half of the year here, and just being prepared just in case there is kind of that bigger event or something like that. Right, September is always the worst month of the year, so maybe we'll get lucky and it's that one time it's not, right? But I think we need to be prepared for if we're going to get a new go lower, maybe dip below that moving average. The weekly moving average, September is probably the month that we would see that. So just be ready for that.
All right, cool. Hey, thanks everybody. Thanks for joining us here, and we'll see you next week. Take care, folks.